Good morning, everyone. Time for another silver update. This is a pattern that has recently jumped out at me. I was drawing some trend lines and noticed a pattern here, so I drew the trend channels, and it just gives you kind of a different way to look at it. A lot of people have talked about how silver was in a bubble or a topping formation, but with these trend channels here, if you look at them, and I know this is not classical support and resistance, of course, because that's strictly based on price, but there also is some validity to trend lines. And looking at this pattern here, it really appears to be simply a breakout of a long-term trend channel. And you can see we stayed within this trend channel roughly from February of 2008 all the way to February of 2011. So for 3 years, the price of silver traded within this trend channel, mostly along the bottom line, until it rose up and tested, then failed, came down halfway, and then broke through the trend channel. And this latest rise that we had, around 32, you can see it rapidly ascended from the trend channel. And this is where a lot of people saw a parabolic pattern to things. But when you draw these trend lines in here, if this is a longer term market, then this may actually just be a breakout and then a retest. If that's the case, then we would expect to see a move much higher if this really is that type of a breakout. So just an interesting way to look at things, a way of stepping back and seeing this in a longer term view. And I've got some other topics I need to address. There's been quite an argument running between Stella Concepts and some others about the volume. He's come onto my channel a number of times and commented about a number of observations I've made about the outrageous, disproportionate paper volume as opposed to the physical volume. I think the figures I quoted were 250 billion physical ounce or paper ounces a year traded versus 50 million that are actually delivered on the COMEX. So I just wanted to clarify that the purpose of my channel is obviously it's silver for the people, and it is a silver suppression site. In other words, I take for granted that silver is a manipulated commodity and that it is in fact the most manipulated commodity, and for that reason it is the most underpriced commodity, in my opinion, the most underpriced commodity in the history of the world, and therefore the greatest investment opportunity in the history of the world. And this channel is about the struggle for, you can see the motto here, physical silver is the stake in the heart of the financial vampires. Physical silver is the bullet that slays the Wall Street werewolves. So this, you can pretty much see where I'm coming from. This running disagreement with Stella has been about his point that the volume on the paper market is still speculation both down and up, and so if the people who are long are speculating and they're real buyers of silver, then why don't they just take delivery, and then this wouldn't have affected the market. So I wanted to read something from Jesse Livermore that would clarify this for you. I'm not sure if you're familiar with the phrase bucket shop, but it's kind of explained in the Livermore article. This is the beginning of Livermore's book where he's explaining how he began in what he was doing. So I'll read a little bit of this and then explain it. Livermore says, I was 15 when I had my first 1,000, laid the cash in front of my mother, all made in the bucket shops in a few months, besides what I had taken home. My mother carried on something awful. She wanted me to put it away in the savings bank out of reach of temptation. She said it was more money than she'd ever heard of any boy of 15 had made, starting with nothing. She didn't quite believe it was real money. She used to worry and fret about it, but I didn't think of anything except that I could keep on proving my figuring was right. That's all the fun there is, being right by using your head. If I was right when I tested my convictions with 10 shares, I would be 10 times more right if I traded 100 shares. That is all that having more margin meant to me. I was right more emphatically. More courage? No. No difference. If all I have is $10 and I risk it, I am much braver than when I risk $1,000,000 if I have another $1,000,000 salted away. Anyhow, at 15 I was making a good living out of the stock market. I began in the smaller bucket shops, where the man who traded 20 shares at a clip was suspected of being John W. Gates in disguise or J.P. Morgan traveling incognito. Bucket shops in these days seldom lay down on their customers. They didn't have to. There were other ways of parting customers from their money, even when they guessed right. The business was tremendously profitable when it was conducted legitimately, I mean straight. As far as the bucket shop went, the fluctuations took care of the shoestrings. It doesn't take much of a reaction to wipe out margin of only 3/4 of a point. Also, no Welsher could ever get back in the game. Wouldn't have any trade. Now he goes on, and he basically, when you understand what Livermore was doing, he was beating the bucket shops. But you need to understand what the bucket shops were. To bucket a trade simply meant that these places were buying and selling stock, but they were bucketing the trade. In other words, they were pocketing the money and not going out to the exchange and trading in actual shares. So what they were in essence was a kind of a casino that was based on just the prices. They were a secondary market that didn't really trade any shares, and people were just betting on prices, which way prices would go. There really was no underlying delivery. There was no asset to be delivered because they really weren't purchasing the asset. So the reason I bring this up is because the method that the bucket shops used to run people out, it was based on margin. And the bucket shops would basically have people put up a shoestring margin, something like 1 or 2 or 3 or 4 or 5% of the value. And then what the bucket shops would do, generally the fluctuations of the stock prices, the way it worked is the people who were trading the bucket shops, they didn't have stops, but what would happen is if the price went beyond a certain range, they were wiped out. They only had so many points. Okay, so now he goes on to describe, and I probably can't find it here, but what they had were bucket shop drives. What the bucket shops would do is if they had a whole bunch of people long a particular stock, say Cosmopolitan or whatever it is, then if they had enough people that were long that stock, they'd actually call some brokers in New York and have those brokers execute a bucket shop drive on that stock. They may need to put that stock down only 2 points, but if they put that stock down 2 points, they could take out all the traders and they'd all have to basically cancel the trades and they'd yield their margin. The bucket shop would pocket all their money. So why am I bringing this up? This is a reason why. Because this argument about paper silver versus physical silver, and as I pointed out, it's a ratio of 5,000 to 1 that is being traded. And essentially what the COMEX is a bucket shop. And the reason why is because the vast majority of it, 99.99% of what's traded there, has nothing to do with the underlying asset. So the people who are purchasing on margin in that market are being taken out by bucket shop drives. So there's an incentive for the owners of the casino to basically push the price far enough and fast enough to take people out of their positions because they are on margin. So that's the essence of a bucket shop, and that's, in my opinion, the essence of the COMEX. And Livermore, on the other hand, was a speculator. So it didn't bother Livermore at all because he was interested in speculating. He didn't care whether something went up or went down. He was only interested in predicting it correctly and getting out before the bucket shop tried to drive the prices one way or another. And he was so good at watching the tape and predicting prices that he was actually able to make a ton of money. And you can see here that eventually the bucket shops, they shut down on him, of course, because they're like a casino in Vegas. You can't beat them. The house always wins. So, and you'll see that continuing on here where the bucket shop shut down on him and he had to go to different cities and find different bucket shops, and then the legend of the boy plunger spread all over to all the bucket shops until it got to the point where he couldn't trade in any bucket shops anymore. He had to go to Wall Street, and the rest of the book explains how he tried to translate his bucket shop style to Wall Street, but it was different because it wasn't operating on the same margin, didn't have the same time frame, so he had to adjust his trading, and that's mainly what the book is about, is his learning as a trader, how to trade from the bucket shops and then onto Wall Street. But anyway, back to the point. It's my opinion that basically the COMEX is just one giant bucket shop, and the margin changes, volatility, and a lot of people say, well, the volatility in silver, I think someone had mentioned in a post about silver is the devil's metal, and I went and followed up on that, and actually the reason why it's called the devil's metal is because the number of traders that are carried out because of trading in this metal, and the people are in the futures pits. That's why they call it the devil's metal. Now, and the reason why so many are carried out, well, the reason so many are carried out in this metal is because of the volatility of the metal. But that begs a very important question, and that is this, which Jason Hommel has continually asked. Why is it so volatile? There's no reason for a precious metal that's mined on a known steady basis and consumed on a fairly regular basis to be this volatile. There's got to be another explanation for it. There has to be something else going on here. And of course, my contention is that what's going on is manipulation of the price. And the reason why is the suppression of the physical. So, all that to say this. I don't advocate speculating in silver, because I believe that silver is the people's money. It's slowly being remonetized by the people. It will be the people's protection from the financial catastrophe that's coming, and therefore I believe you should invest in silver and accumulate silver. So for that reason, unfortunately, although I have a lot of respect for his opinions, I don't really believe that Stella Concepts is in that camp. So I'm going to go ahead and remove him from the silver gurus that I have listed here. I think it's something pretty much that he's decided on his own. We just don't really agree about why we're investing in silver, and so not to get involved in a lot of controversy, but I will go ahead and replace Stella with someone who does share a similar philosophy, that the purpose of this is for us to accumulate as much physical silver as we possibly can and to keep stacking. And we'll talk to you next time.